Hello. Nobody likes taxes, but what if I told you that you actually pay twice as much as you think, especially if you are in a high tax bracket? You see, the reason that we don't get infuriated with taxes is that they sound a lot, but still reasonable. So, for example, if you are in a 50% tax bracket, you would think like, for every dollar I make, the Fed and the state take 50 cents. And okay, obviously we all hope those money is put in good use. But what if I told you that for every dollar you make, the Fed and state take another dollar? That's what the 50% tax bracket means, and this is not some figure of speech or something, it's just simple mathematics. This misunderstanding is not just infuriating, but unfortunately it can make you make some very bad decisions. For example, let's assume that you have lots of money in short-term capital gains, and you want to buy a very expensive car or something with $100,000. So you go and you sell and you're thinking, oh, I'm in the 50% tax bracket. So I get 150 in my bank account, I pay 100 for the car, and then next April I will send $50,000 to IRS and everybody will be happy. But actually, that's not what happens. You will be taxed on the entire amount of 150,000, and those taxes are not tax deductible. So that means that 50% of 150,000 that you sold means 75,000. And if you subtract that from 150, you end up with 75,000 of taxes and 75,000 that you can use to buy this car. That means that if you spend this $100,000 in your car, you're actually overspending. And you will have in April to find another 25,000, and those 25 will have to be taxed again, and this will go on and on for years. 50% tax bracket means that for every dollar that you make post-taxes, you have to pay $1 of taxes. In other words, you split the money in half with the government. More generally, the real rate you pay if you do a few calculations is R divided by 1 minus R. And indeed, if you plug 50% there, you can see that the real rate is 100%. And let's make sure that the numbers work. 100% means that if I want to buy a 100,000 car, I have to pay 100,000 taxes. So overall, I have to sell 200,000 worth of assets. And out of them, 100 will go to governments and 100 will go to my car. That's certainly sad, but at very least you will not have surprises in April. And yes, this formula is absolutely brutal. You can see that for smaller percentages the effect is small. But if you go above 50%, which actually happens in some states like New York, you will end up paying more in taxes than the money you are getting at home and you are able to spend. So we should pay really good attention because those percentages really add up. Now, you might not notice this effect so much every year because, for example, your salary is probably going to be taxed in several different brackets, some of them very low, and then it might end up in higher brackets. But if you need money for big purchases, for example, down payment for a house, you might have surprises on April if you don't know this formula. What can we do about it? Obviously, Google it and find all the ways we can tax optimize so we can legally pay as little tax as possible. Also, be prepared, that's important. Do the calculations right so that you are not surprised and disappointed. And one last thing, and very important you can do, is especially if you have kind of expensive hobbies, see if those expenses qualify as business expenses, right? So for example, I bought many cameras. I should have started a business and expensed them, because for businesses, actually the taxes are an expense in contrast to individuals. So you can avoid being taxed on the taxes you pay. Of course, our businesses have other expenses, so you should be careful, but if you have qualifying expenses, I think it's a clever thing to do. So I hope you find this discussion useful, and thanks for watching.